Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin with the energy sector, which has been a focus for investors during the war in the Middle East. Given the gains made in oil and gas as well as coal stocks, Violetta Todorova from Leverage Shares says attention should now turn to uranium stocks.
Paladin, one of the biggest in Australia, is actually showing a quite good setup. Indeed, we've seen recently some decline to around $10, roughly from $14.50, but that coincides with a pullback in uranium prices from $102 down to almost 84. However, I start to see some signs of stabilization both in uranium prices and in Paladin. The support of $10, its previous resistance, and I think some strong buying will start building up from here. But if investors want to time that trade, the key level to watch is minor resistance at 1150. Once that level of resistance is being broken on the upside, that will be a confirmation that the pullback is completed and will open the way for a rally to around $14.50 in the next couple of months. However, my longer term price target is at $18. So accumulating around current price levels of 11 and potentially reaching $18 by the end of 2026 leaves us with a pretty good upside potential.
Well, the war has also affected agricultural stocks, particularly with supply shortages in diesel and fertiliser. Gary Glover from Novus Capital says while hard commodities have had a great run, soft commodities have been left behind. Here he analyses elders.
And the rationale around that agricultural area is that with all these input costs increasing there, so diesel, sort of fuel costs, grain costs, it does indicate there's probably more pressure on sort of farmers to, they're probably not going to go as aggressive there if the costs are up. So plantings are probably going to be more minimal, and so if the crops aren't, if everyone's sort of planting a bit on the lighter side, then you're probably going to get less crops and probably a bit more, less supply coming on to market there, and then that puts sort of a bit of upward pressure on commodities in general. We've seen that all the hard commodities have had a great run. These soft commodities have been a bit left behind, so potentially that's an area to look at here. It was just interesting seeing a lot of ag stocks there. The thing I like about elders there is we actually did break below this little tightening pattern and didn't follow through. So if you get a false break, and then you come back up into the range there, that's normally quite bullish. So, there's some good arguments as to why the soft commodities could be in for some better times there, and that just sort of potential sort of supply constraints there could add to demand and add to prices in commodities. And we just, like we know, sort of in these periods there, we can see some pretty erratic moves in some of these commodities. So, some of the ag stocks are looking pretty interesting here, actually.
Well, supply chain disruptions have also affected the supermarkets. Gary Glover looks at Metcash, the wholesale distributor to independent retailers.
This chart here really typifies the equities market at the moment. So we are seeing some massive sort of swings there. So we've seen like a margin new high there, obviously in mid 2025. So we've taken out the prior high in 24. But then we've had a sell down and a swing back here. So like most of the staples are actually are trading on the high side at the moment. And if you look at Woolworths, Coles and Metcash, pretty similar sort of businesses, but three completely different chart setups there. You got Woolworths is trading up, Coles is sort of weakened off and gone sideways here, and Metcash is sort of sold off in the same period. So, but that is what happens if you go back and look at the high inflationary environments of the past, like the 1940s and the 1970s. We saw some really erratic price movements in a lot of the sectors and charts there, just really sort of volatile big moves where potentially the 70s there was probably an even greater case there where really the market sort of stood still for about 8 years, but the ranges were amazing. They were basically, it wasn't a sort of a dull market. It was a wide ranging, some big sort of 40% drops, some 70% rallies. It was just some really erratic, volatile moves there. So a real trader's paradise, you might sort of say here.
And that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. Happy trading.